Hey, what's up, everybody? Welcome to Selling Weekly Lottos. Every week, I sell what's the equivalent of lottery tickets to gamblers by using options in the stock market, and that's how I make passive income. We'll keep this one short this week. I've been doing the same thing pretty much every week, so we'll just do this as a normal update. First of all, the disclaimers. I'll just post everything on the screen, and I'm hoping you read it. All right, here we go. All right, and let's just move on. All right, in weeks 29 and 30 for December 26th and January 2nd, the winner is me. I made $1,751 in 2 weeks using $60,500 per week. That's about a 2.89% yield over the total 2 weeks, okay? Let's take a look at how I did it, all right? The first position, boom! It was a covered strangle. You've seen me do covered strangles before, okay? I sold a 310 Google call, all right, and a 290 put at the same time, expiring on the same day. All right, these ones, the calls did get assigned, and I bought to close the puts. Those were about almost $1,400 in gains. 1,100 of it was from the shares. All right, and then the next week after that, I sold 310 puts for Google again and got about a $350, $360 return there. All right, let's take a look at the charts and just see what I was thinking. All right, the first one in week 29, the Google covered strangle. Boom! All right, so just to remind you, this is not technical analysis. I'm not predicting the stock price. All of these lines are drawings based on the parameters of the contracts I sold. So for the covered strangle, you can see both the yellow trajectory line going up and down. That's basically the speed or the rate that the stock has to go up or down for me to get assigned. So you can see here that I eventually did get assigned on the Google calls and had to sell my Google shares that I just bought at 300 about a week before. All right, and pretty good for me. I'm okay with buying them or selling them. It's Google. Not much to worry about. I'm pretty bullish on Google. All right, and then let's take a look at the next week after that. Bazam! All right, same kind of thing, except this one wasn't a covered strangle. It was just puts. So what I did is I didn't want to buy the shares higher than I sold them the previous week. So I just sold puts so that if I was to get assigned, then I would be basically buying the shares lower than what I sold them the previous week. All right, and these ones I bought them back because on the last day they were worth like $4 per contract. It's not worth it for me to risk $62,000 for $8 more. So I just closed them and I took the profits. All right. Let's take a look at the benchmarks real quick. All right. Oh yeah. All right. So I've been still making less money because I've been risking less money. But the really important thing for me here is this average yield. All right. The average yield is still staying consistent at around the 1%, more than 1% weekly average return compared to the last 6 months, the first 6 months, and the total. So this gives me a good amount of confidence because this shows me that whether I want to take less risk or more risk and try to make less income or more income, this strategy does have the potential to scale in both directions. So I'm pretty happy about that. And then the other thing is this call put ratio. I'm still selling more puts than selling calls because I don't have that many shares. All my shares got assigned in the last 6 months, and I'm trying to get my shares back to resupply my stock so I could sell more covered calls. All right, but other than that, 4 weeks passed by and I made $3,000. Pretty happy with that. So, I think this is working out pretty good. All right. So that's it from me, guys. Just a short update this week. Leave any questions that you have in the comments, any criticisms, any concerns, anything you want to say, and I'll try to reply back the best I can. All right, guys. So take it easy. Have a great rest of your day and week, and I will see you in 2 weeks. Peace.